Welcome back to Jersey Matters. We come to you this week from Scotch Plains. People all over New Jersey are worried about Trump's tax reform because they got rid of the state and local tax deduction, and because New Jersey is a high tax state, it's going to hit New Jersey particularly hard. We're going to begin our coverage on that topic with Ellen Kolodziej. Ellen.
Thank you, Larry. The president did get his big win on tax reform right before the holidays. The IRS says most Americans will see some kind of change, even if it's just little, on our paychecks starting in February. But the big changes won't happen until we file our taxes, not this year, but in 2019.
I guess it's very simple. When you think you haven't heard this expression, but we are making America great again. You haven't heard that, have you?
On December 22nd, the president signed the Tax Cuts and Jobs Act, a plan he says will help everyone from the biggest corporation to the smallest family. Here's what it does. The corporate tax rate drops from 35% to 21%. Several high-profile companies, such as Southwest Airlines, reacted by giving some workers a bonus when they heard the news.
This creates an opportunity for us to reward our employees, to invest in our business, to keep our costs and our fares low for our customers, and to take care of our communities.
Other companies giving $1,000 bonuses: AT&T, Comcast, Bank of America, U.S. Bank, and Comerica.
Personal income taxes will also go down between 1% and 4%. For example, a married couple making about $50,000, their taxes will go from 15% to 12%. An individual making $80,000 will pay 24% instead of 28%. And a married couple making more than $500,000, their taxes will go from about 39% to 37%. The plan also doubles the standard deduction. So a single filer's deduction goes from $6,350 to $12,000. The deduction for married and joint filers increases from $12,700 to $24,000. But most Americans won't really see these changes until they file their taxes in 2019 and see how much they owe Uncle Sam or how much they'll get back. But New York Governor Andrew Cuomo says these reforms will be devastating to blue states such as New York and New Jersey. So he's suing the federal government over getting rid of deducting your state and local taxes.
It is double taxation. I believe it's unconstitutional and illegal because you now want to tax the tax that people pay to their state and local government.
Senator Ted Cruz says that's nonsense, and this is a win for everyone, especially working men and women he claims will really benefit from these tax cuts.
That are designed to bring back jobs and economic growth, to create millions of new jobs, to raise wages, and to cut the taxes on working families.
Now, when the president was pushing his tax reforms around the country, he said most of us would be able to do our taxes on a single sheet of paper, and that places who do our taxes would not be happy. But that's not happening now, so places like H&R Block say they'll be just fine because the tax system is still pretty complicated. So when tax season rolls around, a lot of us will still need some help. Reporting for Jersey Matters, I'm Ellen Kolodziej.
All right, thank you, Ellen. Let's talk specifics right now. So the SALT reduction is gone. How is it going to affect taxpayers in New Jersey? Here to talk about that is Marc Pfeiffer, the Assistant Director at Bloustein Local Government Research Center at Rutgers University. Thank you so much for being here. I really appreciate it. Let's talk about is there an immediate impact to the tax cut? Will people be seeing more money in their income?
I think they're working to get that stuff done. I think probably in the next couple weeks, those tables will come out. That's a real challenge for the IRS right now because they still need to make sure that enough money comes in, all right, that you're not going to under-deduct people, that they have to pay a lot of money next April. So they need, and people like getting refunds.
I know that's the most recent part of it, but that's not the most controversial part, especially in New Jersey.
No,
so let's get right into the SALT reduction that has now been eliminated, state and local taxes. That's been eliminated. What kind of an effect does that have on the state?
For those high earners who have a lot of property wealth, that pay more than $10,000 in property taxes. And let's just talk on that for the moment. State income tax number is a significant significantly lower than what most people pay in property taxes. That's going to cause them to not be able to deduct that property tax from their federal income tax. That will result in a higher income that they have to report, and then they'll be paying more in federal income taxes. That's the interesting challenge.
Do we know how many people we're talking about? Because there's a $10,000 cap. That's all state and local taxes. Do we know, is everybody over that?
No, everybody's not over that. We've got an average residential property tax in New Jersey in 2016, 2017 was about $8,600. That's a healthy hunk of change for a lot of folks, but it also means we don't have a lot of other nuisance taxes. All of local government taxes basically come through property tax. Local governments don't do a sales tax. They don't do their own local income tax that other states do. You don't have personal property taxes that states like Virginia pay on their automobiles every year. We just do property tax. It's a significant number. But at $8,500, so we've got roughly a good number of people above that.
We have a sales tax.
We have a sales tax, but
we have a gas tax.
We have a sales tax and gas tax, but that goes to state government. It doesn't fund local government.
Okay.
There's a piece of the gas tax that does fund local road improvements, but it's not collected by local government.
So that's not deductible?
Not deductible, no. It's just those property taxes, income taxes that individuals pay and report on their federal income tax and on state income taxes as well. So we've got a problem. I haven't run numbers yet to see, well, what percentage of folks do we have? But by and large, most of our wealthier folks will be affected by this. They may not be offset enough by the increase in the standard deduction. So they may not be, they're going to still itemize, but their income will be higher, which means they will pay a higher percentage of federal income tax. That's a real challenge to us right now. It wasn't something that was expected. For example, when we had the gubernatorial debates last year, the Governor-elect Murphy was talking about raising income taxes, state income taxes, for earners over $1 million. That's an interesting challenge. That's been kind of put on hold at the moment.
Yeah, I just interviewed Steve Sweeney, the Senate president, and he said we're not introducing it right now. It was going to be the very first thing.
Yep, they talked about that.
And he said specifically because of the federal tax cut, we're not introducing it at all right now.
I think right now, policy staff in Trenton, the Office of Legislative Services, and the partisan staffs on both sides of the aisle in both houses are now starting to consult with experts to see what our options are going to be. We don't know what all the answers are yet. We don't know what the options are yet. We've got to spend some time to figure that out. There's speculation about, well, maybe we can turn school taxes into charitable donations so people can deduct that. That is a target that's moving daily.
And that would be challenged.
That will be challenged. The U.S. Treasury Secretary Mnuchin just released something yesterday saying, really?
And people are trying to file their pay their property tax for next year now. Does that fly? Will the IRS say, okay?
The IRS last month, in December, when this started, we had a lot of people going to pay at least their first half of 2018 in New Jersey property taxes because they had their bills. They had their estimated bills. They were issued last summer. They knew what their taxes are going to be for the first and second quarter of 2018. A lot of people came in and paid them. Some people went further than that. And in New Jersey, tax collectors are trained. If somebody wants to pay you taxes, take their money. You can work it out later. If they overpaid, you deal with those issues later on. That's what a lot of people did. They were effectively taking an educated guess that paying that now, they will be able to deduct it from their 2018 taxes because they already paid it. It won't be a deduction from 2018 because it's a 2017 deduction, which helps them, gives them a little bit of a leg up for 2018, but certainly doesn't help in the out years.
But I thought the IRS said we'll take a look at this on a case-by-case basis, whether you can do it or not.
The IRS did issue a report, an opinion that said if you've been billed for 2018, you can go ahead and pay it.
Okay.
People have always done that in New Jersey. People who go to Florida for the winter, they'll go ahead and pay their first and second quarter taxes in advance. We have laws that permit that. That's an easy one. The question is if they start paying for taxes they weren't billed for yet, which is the third and fourth quarter of 2018, that's where things will get a little dicey.
And that all makes sense. If you have a bill, of course you can pay it,
right? Because
now they're asking for the money. Let's get back to the millionaire tax for a second, because everybody thought that was going to be a slam dunk, and now it's not going to happen. Steve Sweeney said the fear is that millionaires and billionaires, because they have mansions and they have huge mortgages would then leave the state. Is that a real fear?
Yes, it's been a fear for a while. We've talked about it for a while. We have seen cases where high-income earners have left the state, at least for 6 months and a day. They'll go to Florida, and then they'll spend the rest of their time here. And we have tax protocols so we know who's doing that, and they're taxed or not taxed accordingly. But the catch is, yes, people can move. They've got the flexibility to do that, and the challenge to the governor-elect and the legislature is, where's that balance? Clearly, New Jersey has a revenue problem. We have basically constrained state and local revenues over the last 8 to 12 years, 2 administrations where we have limited increases, which has had the effect of squeezing out excessive spending. That's been a good thing. But you look around and we see problems with infrastructure, roads, water, and water is potable water, wastewater and stormwater treatment. We have some serious problems, and we've got an aging infrastructure.
And you have a pension that's underfunded. So
that's a whole separate challenge.
Well, that still takes money.
It does. It takes money on both those sides, and we've got to figure out how we're going to pay for those things. And you really have to step back and look at these things as a whole, and you also have to start building confidence in the public that how we spend money.
It sounds like you're promoting higher taxes.
I think we have to. Yes, we are going to need additional revenue. Ideally, that comes from economic growth. During the Kane years and the Whitman years, we had a lot of economic growth that was able to support a lot of appropriate state spending. But we have a reputation, unfortunately, of making poor spending decisions, and in some cases, wasting money. A new governor has got to be able to make it understood and clear to his cabinet and clear to the public that we're not going to tolerate waste. We're going to be efficient and effective in how we spend our money and the process we use to spend it. And that's a PR job. We've got to convince people, and we've got to take actions that are sustainable and actually get that type of policy done.
Thank you, sir.
My pleasure.
I appreciate you coming in. Marc Pfeiffer is the Assistant Director at the Bloustein Local Government Research Center at Rutgers University. When we come back, the Trump administration is opening up almost the entire country to offshore oil drilling. How will that affect New Jersey? We'll talk about it when Jersey Matters returns.
When we come back, in the never-ending fight to save money, more school districts are consolidating. We'll tell you where it's happening now when Jersey Matters continues.